The 10x Analyst: How to Actually Use Claude for Stock Research. Wall Street didn't spend billions of dollars hiring legions of 22-year-old analysts because reading earnings calls is hard. They hired them because knowing what the CEO didn't say is where the money is made. In finance, information is a commodity. Everyone has the press release. Everyone has the headline numbers. The real edge belongs to the people who can spot the subtle shifts in language, the unmentioned risks, and the hidden contradictions across thousands of pages of public filings. In finance, information is a commodity. Everyone has the press release. Everyone has the headline numbers. The real edge belongs to the people who can spot the subtle shifts in language, the unmentioned risks, and the hidden contradictions across thousands of pages of public filings. For decades, that kind of deep semantic analysis required a team of humans working 80-hour weeks. Today, Claude gets you closer to that institutional level of research than 99% of retail investors realize. But only if you stop treating it like a glorified Google search and start treating it like a ruthless research assistant. The claim dominating your social media feed is that AI can pick stocks for you. That is a lie. AI cannot predict the future. But what it can do is compress 10 hours of grueling document review into 10 minutes of pure synthesis. It shifts your job from information gathering to critical judgment. Today, we are breaking down the exact workflow to transform Claude from a simple chatbot into a high-powered equity research engine, including the exact prompts, the critical limitations, and the advanced frameworks used by power users. Phase 1. Decoding the earnings call. The Delta Method. The foundational step for any equity thesis is the quarterly earnings call transcript. Most investors skim the summary or look at the EPS beat or miss. That's a mistake. The alpha is in the transcript. When you upload a 50-page earnings transcript into Claude, do not ask it to summarize this document. A summary just gives you the average of what was already publicly stated. Instead, you need to prompt Claude to look for the delta, the change over time. Management teams are highly coached by investor relations professionals. They rarely lie outright, but they do change their vocabulary when things go wrong. If a CEO describes enterprise demand as robust in Q1, healthy in Q2, and stable in Q3, that is a massive red flag masked as positive language. To uncover this, you feed Claude the current transcript alongside the transcripts of the previous 2 quarters. You prompt it specifically. Analyze these 3 consecutive transcripts. Map the semantic drift and how management describes their core growth vectors. Highlight any adjectives that have been downgraded, any metrics that were emphasized last quarter but omitted this quarter, and any revenue drivers that are suddenly receiving less airtime. Suddenly, Claude isn't just telling you what happened, it's highlighting management's shifting anxieties. It will flag that a company spent 20 minutes talking about their new AI product last quarter, but only mentioned it once in passing this quarter. That omission is information. Beyond language drift, instruct Claude to isolate the Q&A session. The prepared remarks are a commercial, the Q&A is a cross-examination. Have Claude categorize the analyst's questions by tone and persistence. If 3 different analysts from top-tier firms are drilling the CFO on inventory buildup, Claude will flag that concentration of concern. That saves you hours of reading between the lines. Phase 2. Cross-examination, web synthesis. Once you have analyzed what management says about themselves, you have to verify it against reality. This is where modern AI models with web browsing capabilities become lethal. Management never operates in a vacuum. If a semiconductor company reports that their specific supply chain is flawless and demand is skyrocketing, that sounds like a raging bull case. But what if their 3 closest competitors reported severe macroeconomic headwinds the exact same week? This is phase 2, the cross-examination. With web access enabled, you direct Claude to stress test management's narrative against the broader market. You provide a prompt like this. The management of Company X claims that enterprise software spend is accelerating. Cross-reference this statement with the latest earnings transcripts, press releases, and industry news from their top 3 direct competitors, as well as the latest macro data on enterprise IT spending. Identify any glaring inconsistencies or contradictions. If Claude scans the horizon and finds that competitor A just cut guidance and competitor B cited extended sales cycles, it will immediately flag Company X's optimism as an outlier. Now you have a real question to investigate. Is Company X truly eating everyone else's market share, or is management delaying the inevitable bad news? Furthermore, you can instruct Claude to check management's historical promises against current results. You can ask it to review the Investor Day presentation from 2 years ago and compare the milestones promised for this year with the actual numbers reported in the current filing. Did they deliver on the margins they promised? Did the capital expenditure match their guidance? This takes the AI from a passive reader to an active auditor. Phase 3. Building the institutional thesis. If you look at an equity research report from a firm like Goldman Sachs or Morgan Stanley, it follows a rigorous, predictable architecture. It doesn't look like a blog post. It's an organized, multi-dimensional argument designed to stress test a thesis. Once Claude has synthesized the internal transcripts and the external market data, you can command it to organize this raw intelligence into a structured investment thesis. Instruct Claude to build a comprehensive report divided into specific, unyielding sections. You want a clear business overview that explains how the company actually makes money, not just their product description, but their monetization mechanics. You want a robust bull case detailing the catalysts needed for the stock to outperform, balanced by an equally aggressive bear case outlining structural vulnerabilities. Have it map out the competitive advantages, or the moat, and critique whether that moat is widening or eroding based on the latest data. Request a dedicated section on capital allocation. What is management doing with their cash? Are they buying back stock at all-time highs, paying down cheap debt, or making expensive acquisitions? Finally, demand a framework for valuation and catalysts. What are the specific upcoming events, regulatory decisions, product launches, macroeconomic shifts that will force the market to reprice this stock? When you prompt Claude with this level of structural expectation, the output you receive looks remarkably similar to what sits on institutional trading desks. It gives you a clean, scannable, deeply analytical document that strips away emotional bias and presents the business as a cold machine with moving parts. The crucial blind spots. What AI can't do. But here is what the AI hype men on social media will never tell you. Claude is not a financial savior, and if you use it blindly, it will blow up your portfolio. The most vital thing to understand is that AI does not possess intuition, and it cannot predict the future. It organizes available public information. If a company's fraud hasn't been discovered yet, Claude cannot magically uncover it through text analysis. If management is intentionally hiding a supply chain disaster and it hasn't leaked into public data, Claude is looking at the same polished facade that you are. Secondly, Claude is fundamentally a language model. While it is brilliant at logic and synthesis, it cannot do complex financial math reliably in its head. If you ask Claude to calculate a complex discounted cash flow model or execute precise multivariable accounting adjustments, it can hallucinate numbers, misapply formulas, or present flawed math with absolute confidence. Never use Claude as a calculator for critical metrics. Instead, use Claude to write the Python code or the Excel formulas that you then run in a secure environment to do the math. Furthermore, Claude does not have access to proprietary alternative datasets. It doesn't see credit card transaction data, satellite imagery of retail parking lots, or private shipping manifests that hedge funds pay millions of dollars for. It cannot have private, off-the-record conversations with supply chain managers or former executives. Treat every single AI-generated thesis not as an investment decision, but as a baseline starting point. It is a draft that requires your skepticism, your verification, and your ultimate judgment. Conclusion: the workflow compression. The biggest misconception of the current era is that AI is replacing the human investment analyst. It isn't. It is replacing the grunt work of the investment analyst. The traditional research workflow is broken. It dictates that you spend 80% of your time hunting for information, digging through SEC filings, Ctrl+F searching transcripts, downloading news articles, and formatting notes, leaving you with only 20% of your time to actually think, question, and build conviction. Claude flips that ratio entirely. By compressing the information gathering, the formatting, the linguistic cross-referencing, and the structural summary into a matter of minutes, it gives you 90% of your time back. That means your time is spent where the real money is made, executing risk management, evaluating management credibility, assessing your own biases, and deciding if the market is mispricing the asset. The true power users are not asking Claude what stocks to buy. They are asking Claude to stress test their own assumptions, to find the blind spots in their own arguments, and to generate the exact, brutal questions they should ask management on the next call. Stop looking for an AI that predicts the stock market. Start building an AI workflow that makes you the smartest, most efficient researcher in the room. Turn the tool into your analyst so you can finally be the portfolio manager.